Sounding like a broken record. Gold prices at another record overnight because those dollar bills in America probably just light them up and use for kindling. Better and higher purpose. There we are, 1382.55 or at or around there for the spot. And taking a look at crude oil, a little bit of slippage overnight. OPEC keeping output unchanged. Where are we right now with the crude of 55 gallons there? 82.93. You know, oil went from 148 to 70 or something, and they didn't change the price at the pump. There's got to be some sort of monopoly thing going on here. Brenton Saunders, Director of Taurus Funds Management, joins Sri, myself, and the team from Sydney, New South Wales, Australia today. Brenton, morning to you. I got to tell you, took a peek at the Spider Gold Trust, and the holdings have been dropping down about 20 tons since the end of September. I'm kind of wondering if people are picking up on this. There seems to be some waning interest in this stuff in some parts that people aren't picking up on. What do you make of it?
Hey, Bernie. Yes, I suppose we've had this discussion a couple of times in the last 15% of the gold price, but we have seen quite a lot of activity on the corporate side. Very big hedge book restructure coming out of Anglo Gold in the last 3 weeks or so, I think has helped the gold price in some measure, but we certainly are still seeing quite a lot of investor institutional appetite, but more so in the vaulted physical. The ETFs are being rounded to some extent. You'll know that they've been the subject of some bad press in the last 2 or 3 months, and a lot more investors we speak to are looking for literally physically vaulted gold.
You know, we can talk all we want about fundamental demand and the Diwali festival and Indian demand from the subcon and all that stuff, but the reality is it's a dollar play. You don't have to be in love with gold to have to understand why gold has moved. The inverse relationship between the greenback and gold is at the strongest in about a half year at 0.54. What does that tell you? Dollar debasement cannot continue from here to eternity. At some point, there's going to be a lid on it.
Yeah, that's true, but it could carry on for a substantial point of time. And I mean, you're right, it's not a physical commodity play. Supply demand, at least in the physical consumption side, is less important. But what is really very important, and this goes for all reserve currencies, is if we remain in an environment where we have a need for and an ongoing process of expansion of monetary bases in these countries, gold will literally just translate higher in reserve currencies. You'll see that in producer currencies like the Brazilian real, the South African rand, the Australian dollar. Gold hasn't done that much, and I think that's reflecting what it is and what you said, in that it is the flip side of the dollar coin. Historically, over a very long period of time, that's been its best empirical correlation, and it's likely to stay that way.
Brenton, does Jim Rogers have a point when he says that gold is cheap compared to where it was back in the 80s in inflation-adjusted terms, in today's money around $2,000 an ounce?
Well, empirically that's true. It's difficult to argue with that. I mean, if you inflation adjusted where the gold price is now, you know, we'd need to get back to probably closer to $3,000 to get back to that nominal $800 target in the early 80s. Is it cheap? Is it expensive? Is it cheap? It's difficult. Certainly the marginal cost of production from a producer perspective has moved up materially. I think including capital expenditure, Gold Fields is saying it's bounding on $1,000 an ounce now. So returns in the gold industry are not excess, as it were. They're high by historical standards, but they're not super profit level. And like with copper and any number of other commodities, they're becoming more difficult to find. But gold's attraction and real driver is very much firmly in the investment space. Its treatment and view as a currency or a pseudo-currency instrument that doesn't have a liability attached to it. So when you issue more USD or Euro or Sterling, it doesn't have an effect on gold. And so I think the quote that gold is nobody's liability is and has been true for some time, and is likely to remain that way.
Can't afford it. I'll stick with silver. Brenton, have a good weekend when it arrives, okay? Talk soon. Brenton Saunders, Director of Taurus Funds Management.
Thank you.